Finance Friday time. Colin Cyr from First Ontario, Senior Manager of Business Services. So, Colin, we're discussing retiring from a business. So you've worked so hard to build this business up.
That's right.
Successful business. You've run it for years and years and years, and now you're just like, okay, now it's time to step away.
Yeah.
But it's got to be hard to step away from your own business.
It's not the easiest, and you can't just hand over the keys. There's a whole process involved, right? So we were talking last month about getting into business. Now it's getting out of business. And so that 50-plus demographic, big piece of the entrepreneurial pie, 75% of business owners are looking to retire in the next decade. So that shuffle of the cards is coming, and business owners want to know, what do I got to do in order to set myself up to be able to step away successfully?
Okay, so what are some of the steps that they got to do? Do you look to the kids first? Is that the first thing? Do the kids want to take over the business?
Yeah, great question. I mean, 1/3 of businesses, small, medium enterprise in Canada, is family owned, and so that's a traditional path, right? If you are looking at the kids, get them invested in the business early, so it's a little bit more of a seamless transition. The television show Succession, right? Like, that was the premise there. It can sometimes be prickly.
You don't want that model specifically, I don't think.
It would be interesting and captivating, but yeah, maybe a little more stress than you need. But it is a very viable option and quite traditional. But other approaches that have become more common are something like management buyouts. So you got your employees, management, they're already invested in the success of the company. Half of owners say they'd be interested in having the employees take over ownership. And so Canada's actually developing right now a very robust employment ownership trust regime to make that transition a little bit more seamless for the business owners and the incoming employees if they do want to take an equity share there. So that's another option.
What about selling the business?
Selling the business, once again, a very viable option. You hear about it quite often, mergers, acquisitions.
Yeah.
Some businesses may be willing to pay a premium to take out their competitors. And so while that's an option, outgoing business owners are considering, well, what would that mean for my brand legacy? And, are they going to keep the business in the community? Considerations like that will be important for the outgoing business.
Because that would, for some people, that's ideal, right? That is the retirement plan for somebody to acquire the business.
Absolutely. Build it up to a stage where they can walk away successfully and get a return on it, yeah.
Okay, so what are some key things business owners should keep in mind when moving on from the business?
I think timelines are important. If you have the privilege, think well in advance of who's going to be taking it over and what you're leaving behind. Valuation, right? You've put a lot of equity in this business over the years. You'd probably like to get a good return on it, so a professional valuation can help you there. To that end, getting your books in order, clean financial records, that's going to help with the valuation, but the incoming business owner is also going to know what they're getting into. Very important piece there.
Is there anybody else that's worked into the kind of the transition of getting out of the business?
Yeah, I think really key is consider the stakeholders, right? So your employees, your suppliers, your partners, your customers, making sure communication to them to help understand what the short and long-term considerations looks like is going to be huge. Ultimately, the value of your business in many instances is tied to the ability to continue doing what it does best when you've stepped away, and so those relationships are really paramount.
Yeah, because you think about the employees too. If it just comes out of left field that you're passing or stepping away, they've invested so much time into the business that you've been working for, or you've been running, so that would be a real hit to them.
It's very important, and many business owners, it's more than just the financial return. They want to ensure their employees are protected throughout the process, and for a lot of business owners, keeping the business in the community local is really important when they're looking at maybe multinationals looking to come in and scoop it up. So it's more than just the financial piece, it's the whole picture, and business owners want to take these things into consideration.
Final takeaway then.
Final takeaway, work with trusted advisors. This is not something that happens overnight. Financial and legal advisors are going to help you with the corporate structure. Capital gains tax is a big piece we're talking about right now, so you want to have those considerations in place. So good advisors and lots of planning. We say it every time, a good plan is going to be the difference between success and failure here.
Look at you not pulling in an extra long weekend and showing up in person here today.
Commitment to the gig.
Wow, dedication, Colin Cyr, First Ontario Credit Union, small business. If you have a financial question or topic you want covered, email your questions to financefriday@firstontario.com. If your question or topic is covered on air, you'll receive a gift card from First Ontario.